1490 WGCH. This is Kerry Lutz. You are listening to the Financial Survival Network. And the price of silver, it's hanging firm right around that $33 mark. A lot of attacks on the metals over the past 3 days. Doesn't seem to have made a whole lot of difference. But the person who's been following silver the longest of anyone I know is David Morgan. He's finally back with us. We haven't really connected since the Silver Summit. David, how are you?
I'm doing well. Thank you, Kerry.
You're doing great, man. You got a new microphone and headset, and I couldn't be happier.
No, thanks.
So what's your diagnosis, your prognosis here of the silver market? What's going on here?
Well, Kerry, without giving too much away, because I do have a paid membership and I do have a service where they look over my shoulder. And I just did an update recently on channel formation, and there's reasons I do certain channel formations that differ from most technical analysis. But anyway, without going too specific, we look like we could be catching a bottom here, but I haven't seen enough trading action to really know. But the thought behind what's going on are really couple-fold. One, the meeting on December 12th of the Federal Reserve, I think they're going to have to announce something along another, I wouldn't say another QE specifically, but something along the Operation Twist. They're running out of time, and they are really the last buyer of last resort for treasuries. The treasury market has subsided substantially over the last few years, where China has basically said, we have enough of your debt. We really don't want to buy as much. And that's pretty much across the board for other trading partners in the world. So there has to be somebody that buys this debt. And that, again, buyer of last resort is the Federal Reserve. So what's happening is that they have got to continue to do this. And I think putting on a little bit of the conspiracy hat, which I don't like to even use the word, but regardless, the fact is that the idea of pushing the metals down prior to this announcement, and again, I think it's going to be negative for the dollar and will probably push the metals higher, is they're going to pound them down prior to that announcement. Now, time will tell. It could be wrong, and there may be a delay also. I mean, the market might go the opposite direction for 2 or 3 days. I've been in this market, as you said, for a very long time. I've seen a lot of things. And I've seen a lot of things that are counterintuitive, which I'm suggesting here is they make an announcement that we're going to continue to buy treasuries. They're not going to, of course, say they're the buyer last resort of what I just told your audience. But you might see the gold market actually sell off even further as the professionals sell the market on paper. But that won't last forever, probably a few days. And then the market will start coming back and gaining strength because it's a fundamental fact that it's debasing the currency even further than it is, and this cannot go on forever. So probably long-winded there, Kerry, but really what's happening here, no matter which way you slice it, is the debasement of the dollar is in force in a way that they cannot get out of, and that means the precious metals have never, ever, ever had a more beneficial aspect for preserving wealth or making you wealthier or wealthy or preserving your wealth.
Yeah, and so goes the Fed, so goes the world. It's a mutually assured debasement, MAD. Remember? When we had mutually assured destruction, now we've got mutually assured debasement, because if they don't debase along with the U.S., then their exports become uncompetitive on the world market. Then we have currency wars. And as Jim Rickards so eloquently stated, everybody loses in a currency war.
Absolutely. And I really don't have any further comment on that, Kerry. I'll just take another question. But I would say, as concerned as they've ever been, and I also believe that we're in the last few innings here. We're probably in the 7th inning stretch relating to a baseball analogy. I think we've probably got a couple more years, maybe 2013, 14, maybe as far out as 2016. I really don't see this thing going out further than that. I really do believe that 2013 will be a watershed year, meaning that we will see new nominal highs in gold and silver. Gold well above the $2,000 mark, silver probably in the 60, 65 level by the end of 2013, perhaps sooner. And once these markets make new nominal highs, it's really hard to predict where they'll go on a short-term basis, because there's nothing more bullish in the commodity market than a new high. So again, I think that's going to set a precedence for new highs nominally, and then from that point on, of course, they'll go back and forth and up and down, but the overall trend will be established as higher and higher and higher, again, with some nasty corrections along the way to scare the newbies out of the market.
Yeah, like you said, when you hit a new high, then there's no resistance. There's nothing stopping it from going still higher. And the debasement, it can't have a good end. It can't have a happy ending, because it's proven historically that it's a failed policy, it's flawed, but yet as a short-term stopgap, it's very attractive because it'll become somebody else's problem. They'll have to deal with it. But, we had the elections past us now. My personal feeling is the markets are going to be kept down deliberately, not to put on the tinfoil hat, but let's face it, countries want their currencies to look as good as possible vis-a-vis gold and silver. So they're going to keep these markets down till after the inauguration. Just kind of my feeling about it. But hey, I've been wrong in the short term far more than I've been right. The only good thing is in the long term, I've never been wrong on this bull market in gold and silver.
I would go along with that. It's hard to say technically, and using the commitment of traders, which is still valuable, but not the only thing to look at as far as what the tendency is in these markets, especially if they're managed, and they are. I would say it's possible. I don't see that they have enough ammunition at this point in time, meaning the professional traders that are always short the market, being able to go out from the next month and a half, 2 months to the inauguration. But you could be right. I'm certainly not going to argue with you, Kerry. No, to take that position, and certainly it's valid to take it. I would see it as you get a brief. They would run out of ammunition. The market would rally maybe after this December 12th announcement that I'm forecasting, come back up, get people excited, reload to the short side, and then smash it down again before the inauguration. And that's certainly quite likely to take place. I mean, it gets frustrating, but I want to reassure all of the listeners that as frustrating as it is on a short-term basis, as you said a moment ago, long-term, we're correct, and they can't manage the market to the level that a lot of people think that they can. Yes, they can smash it down from time to time, and yes, they continue to do it, but overall, the trend is up. If they can manage it to the nth degree, silver would still be $5 and gold would still be under 400, and it isn't. So the free market forces are strong enough to overcome their management again and again and again. But on the way up, certainly gold and silver would be, in my strong opinion, at a different price than they are today if it wasn't for this constant, continual management. In other words, they're letting it rise as best they can. In other words, they're trying to keep it from rising too fast and getting too many people excited. So whenever it starts to take off, like silver did in 2011, where we went from 26 to 48. That got a lot of people interested in the silver market. So what did they do? They changed the margin requirements 4 or 5 times and finally smashed it down. And once it starts down, it's easy to force it lower. And of course, you got this huge sell-off, and that dissuaded a lot of people that were thinking about getting into silver at 30, 35, 40, 45. And then, oh, I'm so glad I didn't. Look at what happened. The market got smashed, and these people probably will never get in, unfortunately.
Hey, all I can tell you is I'm glad I bought it at $9, and because when you're right early enough, and I'm not saying this to brag, it's just that I have no emotional conflict going on, because what am I going to do? Am I going to sell my silver holdings and take the cash? I don't think so. So if it goes down $20, I'm still up, and I'm not seeing this thing go back to $9 or $10 an ounce ever, although it could happen in theory, but it's not keeping me up at nights. But people getting in at $30+ unless they're as committed as you and I, David, they're gonna be nervous over every dollar increase or decrease in the price.
That's true. And lastly, I would say that the consolidation period from technically is probably about over. silver's been in this high level consolidation now for a good year and a half. And normally a market that moved again from 26 to 48, any market, be it corn, wheat, any commodity, it's going to take time to rebuild a base. But I think we're about there now. And again, as I said earlier on my 2013 forecast, I'm sticking with that.
Yeah, and it sure looks like it's at heavy resistance around this $33 mark. So could go down a buck or two before the end of the year. I don't think so, but who knows? But more importantly, you've got a new site because you're kind of expanding your focus now, don't you?
Yeah, there's been a real call for some of the marketing surveys that we've done. And a lot of people really, get another newsletter or two, and they're, like my opinion, I do so much in the public domain. And what they really want are our research reports. So we started a new site. It's called Riches in Resources, all one word, richesinresources.com. And there you can go and just buy individual reports. So let's say you like XYZ mining. It's on the site. You pay a fee. You get our research. It's really our sister site. I have several analysts that work with us on these mining tours, and some of the reports, we are armchair analysts. I mean, Pan American Silver, as an example, really we don't have the ability to fly somebody all over the world looking at every one of their projects. But as far as the smaller companies and even the mid tiers, usually we have somebody on the ground looking at least part of their holdings. So anyway, we're very sincere and upfront about what we do. We do, as objective as possible. Of course, we have the disclaimer, whether any of us own it or not. And it's a good way for people to go. And the fact is that, even though I'm silverinvestor.com or silver-investor.com, we're much bigger than silver only. And I want people to know that. So when they go to Riches and Resources, they'll find reports not only on gold companies and silver companies, but you'll see other resources as well. And we're going to continue to expand the sites. We're launching it on a soft launch. Kerry, you are the first to announce it, so thank you.
Great. My pleasure.
And there'll be other reports there. For example, David Smith, who's worked with us for years, wrote a report called Harvesting Green from the Pink Sheets. That report, in my view, is worth the $500, $600, but that's my opinion. You get it free if you subscribe to the Morgan Report. What it teaches people, even seasoned investors, is how not to get burned in the junior Canadian mining shares, how to put a limit order in and take care of business by making these orders correctly. And that's why it's harvesting green on the pink sheets, because a lot of these stocks that are smaller companies are on the pink sheets, and people do not know the correct procedure or process that's required to keep themselves from getting a market order and getting taken by the broker at hand or the whomever is selling the stock. And that report alone will save you a lot of grief and agony on how to enter an order correctly, because a lot of people that have never been in this market before, and again, even people that have, really don't understand the gray sheet or the pink sheets. Sure. And how they operate. So I'm sorry I belabored that, Kerry, but I'm excited because, we do, I don't know anyone else in the world that does that kind of research that has the heart and mind of the investor taken so seriously as we do. Most people's like, here's our stock and you find it on your own or whatever. We're like, no, wait a minute. We're going to help you as much as we possibly can to get the most benefit from our work as humanly possible. And I probably oversold it, but really, Kerry, where I'm at.
So I don't think you oversold it at all, because one other thing that you do, and let's face it, there's hundreds, maybe thousands of newsletters in this space. You always disclose your ownership interest in any stock, any issue that you recommend. And that's the right thing to do, because then people know up front your interest in it. And, that's a factor that they need to judge your research. So the fact that you tell it, there's so many out there, whether they're in violation of rules or not, I'm not the one to judge. But I rarely see people say, I own this stock and I am recommending it, or I sold the stock short, or I sold it and I'm recommending that you sell it. I don't see a lot of people doing that in the newsletter arena, and I think that's something that you need to be aware of, that David lays it all on the line up front, so you be the ultimate arbiter of of his motivation and the quality of the report.
Well, thank you. Yeah, and this is part of the business. And I used to, just to belabor the point, I used to actually sell before I would recommend the stock. And I finally decided and talked to the legal staff that I hire on a consulting basis. And basically the law is you just have to disclose it. Yeah. So, I got tired of doing that. And this is years ago. And I just said, look, I've owned it. Figure it out, folks. I've been in the silver market basically since I was a kid. And most of these stocks I own. So all I have to do is disclose that I own it, because it got really cumbersome. On the sell side, it's a little more difficult, meaning that if I put a sell on something, what I do is I let all of my subscribers have the opportunity to sell before I sell. In other words, I don't sell and then say, oh, by the way, I'm putting a sell on this. That the authorities don't like that, and I don't blame them. And so what I normally do is wait at least 3 days, and usually it's much longer than that, and then I sell. So normally the stock, if I recommend a sell, it usually tends to go down unless it's a huge stock. And then, of course, I get out at probably a greater loss than some of my readers. And really, I don't, do I care? Yes. But it's more about ethics and morals than it is about how much money I can make. A lot in this business, I'll leave it at that.
No, well, I'll just pick it up and say there's a lot of people who don't do that. And they won't even issue a sell recommendation for that very reason, because that locks them in effectively into selling after their subscribers. And, a lot of that would effectively be front running on the sell side. And, there's something to be said for honesty, that it still exists in the marketplace here, because it's a vanishing commodity, ethics and integrity. And we're grateful to you for it, David. And thanks for being on FinancialSurvivalNetwork.com. Go there, hear my other interviews with David. Got aggregated news from hundreds of sources around the world. Sign up for the newsletter, the special report. I got one coming out about buying silver under spot, David. And we'll talk to you again soon.
Okay, great. Thank you, Kerry.